Traders, how are you? This is Ben with Vessel Futures Trading. We're back in the market. For those of you who got scared, Ben, what happened? The market collapsed. What happened to the market? Nothing happened to the market. We're going still in the same direction. We're still gonna talk about the Nasdaq, but for a very specific reason that we talked about it in the last few weeks, and especially for yesterday's trading. Good morning to our Discord community, to our traders, of course, broadcasting live from our Discord channel. If you're not part of this group, join, tag along. I left the details in the bio and in the box of description. If you don't, you might be missing something big. It's a free education for you. Grab and go. Let's talk about the Nasdaq a little bit. Not a little bit. Let's talk about in very extensive way. A lot of you DM me yesterday, what happened, Ben? What happened to the market? How can it be this going down? Nothing's going down. Let's just for a quick second, just in a very short glimpse, see how the weekly interval looks like. It's a very, very clear uptrend. We're going from a major supply to a major demand, going back towards the major supply area with a small hiccups on the way. There is a small, of course, predicted moves. And I want to say it's a very harsh word to say predicted, but it's very planned moves, and we can see how the price behave according to the way we're reading the story. If you read the story correct, you know exactly what to do yesterday. And we want to talk about those two red lines that previously was marked 2 days ago and yesterday. We talked about possible position, why the price can drop to these areas, and it was no surprise. Whoever was trading with us know it, that it can be possible. We gave 6 possible position yesterday, so those of you who was patient enough to wait for the price to make a correction made few $1,000 to their pocket, which is great. Now let's dive in and see how does it look. Let's talk about the day interval. So in the day interval, what we saw is clearly an uptrend as well. The price reaches supply minus supply area, make a correction. Where is the correction? Let's dive in into the 4 hours chart, and we'll see what happened over here. Basically, those are 2 lines. I want to talk about it for a second. Those 2 lines, 1 and 2 lines that we pre-marked over here, and those 2 pools that we marked, this and this. Those 2 demand pools that they were marked yesterday and day before. Why it was marked, we talked about how those demand pools are parallel to those lines. Basically, it's a possible turnover point. The price can hit in reverse within the range of the previous day. Basically, if we look on those lines, we see that as a possible, even if we're gonna extend this 4 hours demand pool, we see obviously in a very clear way that the price can potentially flip and reverse when it comes into those areas. It doesn't mean that it's gonna stop over there, not gonna go upwards. There is a way to predict those moves, and again, to act accordingly with the risk management factor. Everybody here have their own risk factor. Of course, as always, this is not a substitution for financial advice. You should always consult with your financial advisor with just our trending ideas. If you want to jump on, you're welcome to do so. Let's dive in a bit in a 50 minutes interval. I want to show you how does it look. So basically, here's where we were yesterday. A price was accumulating energy with all this move. I want to just mark this area for a second for us to see it. We'll take maybe highlight this. So we're taking all this area right here, and we see how the price basically is accumulating energy, especially down in this areas right here, accumulating energy to make a bigger move. What's the bigger move? So let's just not forget what are those pool areas that we marked within the day with the 4 hours interval. Those called in the professional language order blocks. What's order blocks? Those are commands that were left over here to be picked up when the price needs to go to make a bigger move. So when we're doing those things, when we wait patiently enough, we know that the price have a potential to come and pick up those orders and then potentially flip and reverse. But if it doesn't flip and reverse, what's the next outcome? The next outcome will be continue to go downwards. And it's 0-1, either going up or going down. Accumulating energy is part of the deal as well. So if we see, I'm gonna cancel this candle, this arrow for a second, and let us see in the 4-hour interval for a second, where can the price go potentially drop within the day. So we see it very clearly. If we mark this supply, I'm going to change the color so it's going to be more clear. Let's say we mark this supply area right here, right? That's our supply area for just a quick second. Our next demand area is the following. If we're going from a 1 second test, we're going downwards, we see how the price still struggling to go up. It means that the next possibility is to go to the next demand area and take a long position from here all the way upwards to the major demand, to the major supply. So if this not happening, we don't have the supportive volume, we gotta go to the next one, which is gonna be in this area. We're gonna mark it over here for us to see. We have another demand area right here, and there we're gonna look for upwards from here, take a long position from here. So here's a couple positions that we have within the day. I just wanted to explain to you how does it look within the day, where the price can definitely potentially go. It can go definitely to the next demand area, flip and reverse, or it can next to the next demand area, flip and reverse. Why still our long is our favorite position? Obviously, we've seen the weekly trend, the weekly interval, that it's an uptrend. We see in the day interval it's an uptrend, but within the day we have options to trade it with short and long. Obviously, yesterday, if we were here, we made a short position. Why? Because we're still in a supply. When we were in a supply, we either short position it or doing absolutely nothing. So those of you that took this position, great. Those of you who did not take this position, also very good. Why? Because in the last previous days, we saw how the price slowly but surely breaks those supply areas, and we were still able to make a long position within the supply areas, knowing that the candles are showing us the way up and the volume was supporting the candles. So it was very, very easy to do so. And when it's not easy to read it this way, you should actually not trade. You can sit down and wait for the next position. And that's the beauty of futures trading. You can open a position in every second you want. You can close position with every second you want. You're in the biggest market. So unlike any other business that you have, you literally have potential to make money every second, to open a deal, to close a deal. And this is how it works. So let's dive in the 15 minutes interval, trying to understand within the day where we can go to with this position. So we see how the price over here already flipping in reverse, potentially already touching the minor supply that we created over here. We can definitely flip and reverse with here. Let's check the night and day profile. Basically, this is parallel to the previous day POC. Let's see how does it look within the night. In the night, we see the price keeps the range of the previous day, which means that we have, obviously, we see the day had extended to in a very long way from the supply to demand. Within the night, accumulating energy, dropping a little bit below to the previous day. Now get into the POC, which potentially we can take. We see how the price will go with the 5 minutes, going down and narrow down this interval to 5 minutes, and we can see that there's still a way to short position it. Let us try to short position it all the way down here. We'll wait for the time interval to finish, and let's say if we take this position, a quick short position from here. Let's see how this is gonna work. Just can make a quick $4,000, risking only 900, which is, I'm sorry, it's a buy. Put a stop. Of course, we're gonna short position it, not long position it. If we see the price basically gonna take short position from here downwards to the next supply demand area. Sits risking 840 to make $4,000, which is amazing. Why I can afford myself to do so? Because I see the ratio that is very healthy. Let's try to understand the ratio of this short position. If we're looking in this short position right here, that's basically a risk reward ratio of 505, which is amazing. And I can definitely see the price is trying to recover and bounce back from this area. If not, I can sit down and wait and not rush myself into the position. As we can see in the time interval, we got another 3 minutes and 40 seconds. What I want to see is basically this candle right here that being created is crossing downwards this candle and passing it, and then I can afford myself to go to a short position. They're gonna support it with a volume. Right now I don't have a supportive volume. I see the volume is a green volume. It means that the buyers are very much in the picture to buy and to dominate the market. Therefore this position is I'm not gonna market order it. Let's see a different position that can definitely be a position we can flip and reverse. The price will, in assuming that we're looking for the price to go downwards, I'm gonna take a long position from here upwards. That's one position. If not, I'm gonna have to wait for the day profile to start to be formed, and we'll look where the price takes us within the day. We still see that basically the price is yet to be determined if we want to flip and reverse, but that's first position we have right here. So with that being said, let us talk about the second position. Going back to the 15 minutes interval, understanding the price can definitely flip and reverse towards upward. It can even flip and reverse over here. I'm feeling more comfortable to take the long position from here. Why is that? It's because, look at this, I'm again gonna brush it up for us. It's gonna be a little bit more coherent and easy to understand. This is basically the whole move. We see how the price accumulated energy to a bigger move. I'm feeling very confident to take a long position from here. I'm gonna mark it. Just 1 second. Let me cancel this. Okay, we're gonna leave it over here. Basically, I can take a long position from either the low value area of the previous days of this. Looking on this day, can take basically a long position from here and right here, making a long position from here, either low value area, either POC or high value area, upwards all the way up. So this is another possible position. With that being said, this is our position for the day. Of course, everybody's gonna make his own choice and risk management. So manages risk according to what he or she wants to do. So let us quickly review on this specific position. We see how the price almost finished to the time interval. We don't see yet that this candle is crossing the doji or this candle in order for us to get to a short position. If it would, we'll take it. If it not, we'll narrow the risk even to the next demand area. Be informed. Let's take this to 2700. See how the time interval, if we're gonna support it to get at the position or not. Of course, within our Discord channel, those of you who are connected to us, we're gonna further investigate and further do more execute these positions and see how it went for us. If it went good, if we didn't went good, how your trades went, if it went according to what you have been studied in the courses, if you stick to the methodology, if you actually do what needs to be done. We explore and we're gonna revisit those positions. Of course, I want to wish you successful trading, and I'll see you on the next market overview. Thank you for watching.